I'm really pleased to say we've got Al Fullerton from Aliom Financial Markets with us in the studio. We were just chatting a little bit about the China data anyway. Al,
Yep.
The interesting thing as well, can I say, about the export and import numbers was the imports of iron ore actually falling, and that was for a third straight month. So in some ways there was some worrying signs maybe for us here in Australia. Does it necessarily change your view on the iron ore sector when you see numbers dropping like that out of China?
It doesn't. You also saw the Baltic index sort of showing there's been a fall in the shipping. It is, economic data is by nature going to be choppy. It's going to be up, it's going to be down. It might not always flow through and point you at a certain direction there. I think what we have to do is make sure that the data that we look at is not a mid-tier, a second-tier level of data, but it is actually the information like the gross domestic product, like their growth, like the PMI data, which gives us that good macro view there. Because what we saw China with these new Western infrastructure spends coming through there. So there's a demand, and we've got a concern. Okay, maybe the iron ore shipments are falling, but at the same time we've seen this demand all of a sudden will be flowing through from these infrastructure projects. We've got the same in India with these infrastructure projects, and so yes, I think that obviously we have to watch this data, but let's really focus on the real biggies, I think.
All right, let's.
Hi, it's Al here from Aliom Markets. Just want to ask you a very quick question, a bit further to the east, over in Japan. Now, reading over the weekend, obviously Japanese debt at the highest level of all industrialised countries. The fifth PM in the last 4 years. The raising, obviously, yen really hurting their export market. What is going to get Japan out of this situation? And I think these fears seem to be growing on a daily basis.
Well, it's anyone's guess at this point. You know, Japan is such a curious case, and it's very easy for us to overlook Japan given the news flow out of China, the size of China's economy. But keep in mind, Japan's economy is still a very significant piece of the global puzzle, so to speak. And the markets in Japan still an important indicator. And it's interesting, we watch the volatility that's going on in the political world there. We don't see a huge impact to the markets. You look at the Nikkei 225, it's up about 0.1% right now, just fractionally at the moment. We've seen mixed signals on the economic front in terms of producer prices. We had the latest figure out today, showed some moderation in those prices for producers. Of course, consumer prices continue to be a challenge there, but business investment looks like it may be on the upswing. So we get these constant mixed signals out of Japan. The political stability, though, is an important part of it, and Japan has to get that element in order for investors to really pile back in to the market. At least that's what we're hearing.
Turn to our guest in studio with me, our expert for the hour, Al Fullerton, who's from Aliom. Just on the back of talk about property in Hong Kong, I want to ask you about our own housing market here in Australia. We've just had housing finance numbers through not even an hour ago. They were for May, and they seem to be stronger than expected. 1.9% seasonally adjusted, that's on month. Is there better news maybe starting to come out of the housing market? It's been a bit soft for a while.
I think the key points here, one, obviously the unemployment rate easing off, giving that sort of real security to the market. You won't be out buying a house if there's that concern about financial security there. I think rates still at historically low levels, 4.5%. There is some speculation, obviously, in terms of the next 6 months and the RBA, tightening policy, how frequently they're going to, if they will, and all, increase rates, and that, is maybe giving a little bit more, spending power for people to get out there and start looking at houses. So look, I think it certainly reflects, maybe the Aussie investor sentiment and the consumer sentiment.
Are we going to see a re-rating of stocks exposed to that housing sector?
I think once we digest this information, look, I think forecasts were at 1%. It came in at 1.5%. I don't know whether what material effect that will have on the stocks. So they certainly have been bashed down. But we have seen someone like Adelaide Brighton obviously having a very strong run up last week, and that's one stock in that sector which I continue to like. James Hardie was another one which we were looking at. It's been really sort of hurt down with the US recovery story not maybe panning out like we expected a number of months ago. But that's another stock there which is quite interesting and not bad exposure to this eventual US recovery story which will come.
Eventually, which is taking a long time, I suppose.
It is indeed, yes.
In terms of the Adelaide Brighton, you like that stock you just said?
I do, yes.
There was an upgrade to guidance or something last week, wasn't
Yeah,
there
was. So Adelaide Brighton came out there and an upgrade to guidance and sort of coming out and really giving a bit of a sign that the sector is well and truly in recovery. There were some concerns in terms of a housing bubble, and I know this has been mentioned on numerous occasions there, and perhaps that fear again has been slightly alleviated, but it is this dichotomy between positive news and negative news and fear, and then returning back to some normality, and it is shaky, but this housing data does show that certainly the bulls are somewhat back in action. Yeah,
well, as you say, there's that real tussle at the moment between the optimists and the pessimists out there. What's going to break that deadlock? I guess there's issues hanging over this market. You can't see a resolution to any time soon. It's the sovereign debt issues. It's what will end up happening with China. What's actually going to break this deadlock?
I think what will break the deadlock will be the return of consumer and investor stability. I think that the fear that we've seen data coming out, especially the manufacturing data coming out, and we've seen data in expansionary territory. But yet, because there's a slight cooling off, because the numbers have slightly eased back from the previous month, the markets have been punished for this. When realistically, it's actually just an easing of the markets. I don't think we're going towards a double dip recession. I think it's a natural easing back of the markets, and yet it's sort of being seen as a real doomsday scenario.
All right, let's take a break, Al, and when